You've worked hard to earn and save. Now it's time to make your money work hard for you. This is Empower Your Retirement with Frank and Frankie Guida of A Better Way Financial.
All right. Every week we like to do some Finance 101, some baseline information of things that you, dear radio listener, that you need to know about. And in particular, because, I mean, guys, you are here to help, but these men and women from the Lehigh Valley, they come in. These are smart, hardworking people. They take pride in their money. So there's a lot of work that comes. They take care of a lot of things on their own as well. So this is a good opportunity to remind people about time of year and what they need to make sure they've checked off before the year end regarding tax saving strategies. So let's talk about that. What do you want people to know regarding tax saving strategies before January 1st?
There's so many things to know and do. Okay. Like tax loss harvesting. Yeah. You have your non-qualified accounts. They're filled with investments in the markets and that type of thing. And some of them have losses, some of them have gains. And it's time to figure out, how do we mitigate some of these gains and losses and make sure our portfolio is the way we want it and all that stuff. We provide that type of help for folks, don't we, Frankie?
Absolutely. And if you're able to use a loss to offset a gain, now you're able to increase that cost basis and get more money working for you without having to pay the taxes on it. So it's a way to be able to save money in taxes on those non-qualified accounts, something we look into this time of year. We also look into HSA contributions. So if you have a high deductible health plan, so if your health plan premium is somewhere between $1,600 and $1,700 or more as that deductible, then that's something that you may qualify for an HSA plan as well. And so with that HSA, it's one of the best legal tax benefit type things that you can do.
I mean, when you're looking at it, you get a tax write-off for putting money in, and the money grows tax-free, and you can take it out tax-free. How do you get better than that?
As long as you use it for health expenses.
Well, yeah.
Well, there's a key caveat there, but yes, as long as you're using, which everybody, just about everybody
we all have them. We all have these health expenses.
At some point in their retirement years, they're going to have some health expenses, even if it's just routine checkups and stuff like that. Sure. So it is good to have that extra money working for you. You can get it invested, you can get growth on it, and then you can take it out tax-free for those health expenses down the road. Usually people pay hundreds of thousands of dollars in health expenses over the course of their retirement years. And so having that pot of money continuing to grow over your working years can be a really nice way to get it growing tax-free and then using it tax-free for those health expenses. So that's something we look into is that an option with your work plan? Is that something that we can take advantage of so that you can make sure that you're getting that money growing tax-free for you and taking the tax deduction each year they put that money in? It's really, really nice. It's really the only place I see in the tax code where you can get a tax deduction on the way in and get it tax-free on the way out. So at least federally, with 529s, they have that available, but that's only at the state level. So that's something that's really cool to see with the HSAs. Roth contributions. So that one you actually have until April 15th of the following year. So if you're stressing about getting that Roth contribution in and you qualify, you're under that. It's roughly about $200,000 to $250,000 income limit if you're married filing jointly. Then you are wanting to get that in. You have until the April 15th of the following year. They did just make an announcement recently that they are increasing that Roth contribution limit. So it's going up if you're under age 50 to $7,500 that you can contribute there if you're single, and then $15,000 if you're married filing jointly between the two of you, if you are able to qualify. And if you are over age 50, you get an extra $1,000. So they'll be able to go up to $8,500 for you there. So nice way to be able to get some of that money working tax-free. And some nice tax planning you're able to do there. Contributing to your 401k. So if you can do that on a pre-tax basis, you're able to get the tax deduction in the year that you put it in. If you want to be able to grow it tax-free over your working career, then you can have that going in Roth instead of pre-tax. If your employer allows it, there's also the eligibility potentially for after-tax contributions. And what those are is basically using after-tax money, putting that into the 401k, and you can do between your employee contributions, your employer contributions, and the after-tax contributions, you can put up to around $70,000 into that 401k if that's an eligibility thing that they have within the 401k. You have to check your specific plan to see if that's a possibility. But that's a way to get up to $70,000 growing in a tax-efficient manner for you with that 401k as well. We also look into Roth conversions this time of year, trying to make sure that we get all of those done for our clients by the end of the year, it's crunch time. It's crunch time. Our team is working, trying to get everything done, trying to get everybody converted who needs to be converted, and making that money grow tax-free over their retirement.
And you know, Frankie, really the most important thing, you know, this is the holiday season. This is the time of life that we're thinking about our family, you know, and thinking about how we're going to go forward. What are the best things that we can do? You know what? One of the best things people can do is pick up the phone and schedule a time to get this ball started. Get it started so that you're more able to tackle what life has to offer you. If you want to retire now or in the future, knowing what that's going to look like, knowing how to do the things to put yourself in a position to really, really enjoy those retirement years, save money on taxes, live life to the fullest, enjoy it with your family. These are really the types of things that we're looking for people to do right now. And the first and most important thing, make that phone call. Get that ball rolling.
Yeah, and so this is exactly the type of planning that we do. We are able to look into your situation, look into your tax situation, see what's working well, what's not working well, what's not efficient, so that we can make everything work more efficiently for you. And by putting together and creating your own complementary retirement tax plan. And so if that's something you want to have drawn up for you, we are going to be able to do that on a complimentary basis for the next 5 callers. So if you're 55 and older and you save $500,000 or more for your retirement, give us a call for your complimentary retirement tax plan. That number to dial is 610-440-3722. That's 610-440-3722 for your complimentary retirement tax plan.
You know, while you're thinking about it, all the wonderful things that can happen for you, all the planning that can be done to make your life so much better. We, like I said before, we're so blessed to have so many wonderful clients and referring their friends and family. We did have a couple come in. They were referred by our clients, 63 and 57. He was 63. She was 57. They were looking to retire in just a couple of years at 65 and 62. They saved $1.9 million for retirement, and they wanted to live on $120,000 a year in income, and we were able to show them that they could do that and even more.
Yeah, and it really started out with their tax situation, looking at, well, what can we do to save them money in taxes? We looked at their non-qualified brokerage account. They were with a big company, and that big company did a lot of trading. So they were trading in this account every month. And so they weren't able to get long-term capital gains tax rates, and they had to pay ordinary income on these funds that were being traded. And so we said, here's what we're going to do. We're going to change this from a active management situation where it's being traded all the time to something that's going to be more of a passive situation where it's not going to have as frequent trading. And by having it more of a passive long-term situation rather than an active short-term situation, they were going to be able to pay long-term capital gains tax rates instead of ordinary income tax rates, which can certainly make a difference. At $120,000 of income, they were in right around that 22% tax bracket. And so moving them down to the long-term capital gains tax bracket was only at 15%. So it was a way to be able to save them money in taxes by having that portfolio in more of a passive management situation where they're able to get that long-term capital gains tax rate. We also looked into their traditional IRAs and their Roth IRAs and wanted to see, should we do any conversions over the next several years? And in their particular circumstances, it made sense to do the Roth conversions between 0 and 100,000 over the next 8 years. And so by doing those conversions, they were projected to have about $338,000 or 12% of their portfolio growing tax-free, and were projected to save over $800,000 in taxes over the course of their retirement years. By saving that money in taxes, that over $800,000, this translated to them being able to do one or both of the following things. They could either retire sooner or live on more income, or a combination of both. And we showed them that, hey, if you guys wanted to, you can actually live on $22,000 more income every year for the rest of your life and retire in 2026.
Nice.
And when they heard that, they were ecstatic to see we're on the right track. We don't have to continue working if we don't want to. And we can have both of it. We can actually live on more income.
Right.
And I said, well, if you guys wanted to retire when you had initially planned, you can do that, and you'll be able to get up to $31,000 more income per year. So is that extra few years of working worth that extra $9,000 of income? And then they get to make that decision and say, well, here's my situation. Here's what I want to do. I am happy with work, or I'm not happy with work. And so having that freedom, knowing you can retire when you're planning to retire or potentially sooner, and having more income because of the savings in taxes and the savings that you've done can really go a long way. And so if you haven't had that retirement tax plan drawn up for you, showing you how to maximize your portfolio when it comes to tax planning perspective, give us a call for your own complimentary retirement tax plan, personalized for you. That number to dial is 610-440-3722. That's 610-440-3722 for your complimentary retirement tax plan.
Thanks for listening to Empower Your Retirement with Frank and Frankie Guida. To learn more, visit abetterwayfinancial.com.
By contacting us, we'll review aspects of your retirement portfolio to include suggestions about how best to utilize estate, tax, and retirement planning strategies and other financial services, or if changing management styles is appropriate for your specific needs and objectives. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendations to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. A Better Way Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Any client experiences discussed during this show are unique to that client, and they are not meant to imply or suggest you will experience the same results. Advisory services offered through A Better Way Financial. Insurance offered through licensed professionals at A Better Way Financial. Pennsylvania Insurance License number 301779.